when I talk a bit more about the banana zone where we are. So here's Bitcoin. Last time Trump came in, it rallied into the end of the year and then corrected 27%. And then it just went up, and alts outperformed because alt season happened. Now, that was driven by exactly the same factors. Trump getting in, dollar went up, tariff and rates went up. Tariffs are inflationary. What happened as soon as Trump got in is he said, we don't want a strong dollar, and rightly so. I think I'll say that again. And the dollar weakened and rates went down for the entire next year. Even though the Fed were raising rates in 2027, the long end was going down in yield. That setup is likely to happen again.
Raoul says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. This isn't just speculation, it's a pattern Powell has seen before. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months, and why next year, more than ever, we'll see massive capital pouring into the space. With major pension funds and institutional investors on board for the coming cycle, Raoul predicts that crypto is on track to be a $10 trillion digital asset class. Powell says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before.
The year has been great. The Everything Code has completely nailed it for us. What we're seeing is the market kind of recalibrating, like, oh, they're never going to cut rates again. Well, you know, if you're armed with the Everything Code, you're going to have to. Because if not, you'll lose control of the bond market, in which case you have to use yield curve control, which is the same as more cowbell, which is more stimulus. So we know that they're going to bring it down. He's already said he's still biased to do this. He says, well, we're kind of neutral now, but we want to bring rates down. And the dot plots say they want to bring rates down, but they've raised the bar a little bit for this. So that means any weaker data gives them the opportunity to get rates down. As rates come down, it lowers the mortgage rates, which actually lowers inflation. So they want to do that. The other thing that I think Jay Powell wants to do, and certainly Scott Bessent when he comes in, is they need to weaken the dollar. The dollar plus rates has caused financial conditions to tighten, which is our global liquidity. And I'll come onto that a little bit later when I talk a bit more about the banana zone where we are. But we've had actually financial conditions tightening somewhat. And I think they're going to unwind that. So I don't think there's anything that's not expected. The other thing nobody's actually thought through is Elon is basically saying he will shut down the government in order to get rid of the budget they were trying to pass. You know, it's like this thick. It's nonsense. So he's going to try and fight that fight, which means there'll be a government shutdown. Will it be the shortest or the longest shutdown? I don't know. But Auntie Janet has 775 billion in her bank account to spend, which is a net injection of liquidity from the Treasury General account. That will likely be released. People haven't figured this out yet. Massive liquidity. Jay also said that he's going to cut the reverse repo a little bit further than expected. And the idea is to drain the reverse repo and put it into the banking system. That's about another 100 billion. So there's about $875 billion of stimulus that's potentially out there to come. If they cut the reverse repo, they're likely to end QT, because if not, the banks will end up with no capital. So QT may end as well. So if we've got two things wrong. One is we expected inflation to be a little bit lower by now, but because rates have not come lower, this kind of weird duality issue. But rates are relatively low anyway. I mean, inflation is relatively low, but I think we'll see rates come lower. The business cycle, our forward-looking indicators are screaming higher. I'll show you that later. But ISM is still subdued, and we need ISM to go up so we can all earn more money, because the business cycle is that what drives us. We're not tech giants who can just print money out of thin air by building AI tools. Most of us have to earn something and make something for a living, and we need demand, and that's not there yet. Hopefully I've really helped you guys. I've been trying to unfuck your future. I've been trying to educate you guys, help you. I've been trying to help you develop your own frameworks and understanding. I still see the panic that rolls around. I understand. All of our wealth is in this trade. Mine too. I'm no different to you guys. But you can't panic on every 5% pullback. It's just going to be top. Somebody posts something on Twitter. Oh my God, it's all over. I put a poll out. My mind is blown. I put a poll out saying, what do you think is the peak of the cycle? 65% of people think the cycle peaks at 150,000 Bitcoin. Maybe I'm wrong, but that sounds like PTSD to me. It sounds crazy considering what's happening in US politics, regulation. It sounds crazy when all the liquidity still lies ahead. It would be ridiculous versus any other cycle. So, but I could be wrong. I've been wrong in the past. I'll be wrong again in the future. But I can see the PTSD and the fear because it matters so much to everybody.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now. We are heading into the banana zone, a period characterized by parabolic moves upwards in crypto prices.
I know it's important to everybody. I know this is the biggest bet everybody's ever taken in their entire careers. And as we go into next year, I will be trying to guide you on just taking some lifestyle chips off the table. I don't know when the right time is. And you'll be panicking because the market will fall 20%. You're like, oh my God, I've missed the opportunity. You haven't. I mean, the market's up so much from when most of you guys bought it. But we'll take some lifestyle chips off and you guys can then calm down. But the banana zone will help us. The banana zone will move to the banana singularity when everything goes up at the same time. And then you'll take some money off the table and you will hate doing it, but you will thank me at some point. And then we'll figure out the rest of the cycle as we go. So this is the chart you're all worried about. I mentioned this on Twitter. You're over-indexing on the fact that liquidity is going to draw and it will bring price down. Are we having it now? I don't know. I don't think so. I think we actually have another push into year end because this chart suggests that it actually goes into year end, but I'm not expecting perfection. So maybe this is the drawdown, but it looks terrifying on the chart. But we've seen all of this before. And let me show you. So here's Bitcoin. Last time Trump came in, it rallied into the end of the year and then corrected 27%. And then it just went up. And alts outperformed because alt season happened. Now, that was driven by exactly the same factors. Trump getting in, dollar went up, tariffs and rates went up. Tariffs are inflationary. What happened as soon as Trump got in is he said, we don't want a strong dollar, and rightly so. I think they'll say that again. And the dollar weakened and rates went down for the entire next year. Even though the Fed were raising rates in 2027, the long end was going down in yield. That setup is likely to happen again. So we're getting into this perfect setup that whatever the correction is, things will rally. Now, it was Bitcoin that had the bigger sell-off. Other things like ETH sold off less and then rallied back in that period. So we don't know what happens. Let's zoom in here on the chart of Bitcoin. There it is, the Trump victory, this rally in Bitcoin, the correction, and then it did 23x. Yeah, 23x. Are we going to do 23x? Absolutely not. Are we going to do 5x from here? I don't know, probably. You know, my base case is 250 worse, 500 plus in a blow off top market. Like, I'm not saying it's going to 500,000. I have a probabilistic framework. I think it's possible, but I don't think it's the most likely thing. So, each time we've had these kind of transitions into the new government, we have this breakout, and that should continue higher. Don't see why this can't go 200,000 plus. I mean, it would look pretty basic on this chart, even if we have a law of diminishing returns in the Bitcoin cycle. So for me, it feels good. If I look at the global M2, which is another way of measuring liquidity, look, every time we get to election year, you have this tightening of liquidity. We had it in 2016, and then 17 it expanded. We saw it in 2020, then it expanded, and now we've got it again. It kind of retests the breakout and keeps going. Global liquidity is actually driven by the dollar. So it is going to be about the dollar, and things can change, and I could be wrong. So the dollar is the main thing. The dollar last time, it's been following the 2017 election cycle really well, 2016, 17, and it should say this last leg in the dollar, next few days and stuff, should be the end of the dollar rally, and then that will ease up global M2.
Powell's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Powell also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below.